Hello everyone, welcome to Teqnyat Digital Academy. Today we will start the Fintech and Financial Inclusion Executive Program. Let's start day one, which is the introduction to Fintech and Financial Inclusion. The learning objective of our today's lecture is to understand the basics of Fintech, the definition of Fintech, then the evolution of Fintech. What is Fintech? Fintech stands for financial technology. We can call the technology itself, which we use to provide or introduce financial services to end user. We can call this technology as a fintech. We can call the organizations use the emerging and advanced technology to provide financial services for end users. We can call them fintech. So we can call organizations as fintech when providing financial services using technology, or we can call the financial services technology as fintech. Even banks today, it is a question, can we call today's banks as fintech? Yes, we can if they are providing their own financial services using technology. We see today all of our banks rely on the mobile devices to introduce their services through the mobile banking application. Okay, so fintech as a terminology or as a word, it stands for financial technology. So fintech is two words. The first one, fin, is referring to financial. Tech is referring to technology. Then it is fintech, financial technology. And as we said, you can call that the technology that provide financial services is fintech, or the organizations rely on the advanced technology to provide financial services. We can call them fintech. So this terminology already refers to the innovation or the innovative use of technology to provide financial services, enhance efficiency, disrupt traditional banking and financial models. It is about digital transformation. Digital transformation is talking about the service disruption, all of the services disrupted when organizations, suppliers, competitors rely on the emerging technologies such as blockchain, artificial intelligence, cloud, machine learning, and other technologies. Fintech is encompassing a wide range of products, services, and technologies which leverage several advancements or advantage in computing, data analytics, artificial intelligence, and the blockchain. Okay. So our first question today is, what does fintech stand for? I think we already answered this question in the last slide. We have for answer financial interaction technology, financial technology, future integration tech, financial innovation tool. And from the last slide, we already defined fintech as the financial technology, or stands for financial technology. The secondary question, which of the following best defines fintech? Traditional banking practices, technological innovations in financial sector. We have marketing strategies for financial products, financial regulations, and compliance. Yes, it is technological innovations in financial sector. Now, we have seen during the last 2 decades a jump in fintech services and how these services revolutionized based or using technologies. And let's start from 1950s to till 2000s. We have several stations. We can back to 1950s to know the roots of Fintech. And the Fintech services started by the credit card, which started to be used in 1950s. Then the use of electronic trading in 1970s. The terminology of Fintech started to gain popularity in the last 20th century as the internet became more widely adopted. Then online banking and early payment systems started to emerge, laying on the grounding of future innovations. Online banking and e-commerce started to be an online services in 1990s, and after the rise of internet already paved the way for online banking, because the rise or the evolution of communication, we started to see the evolution of internet connectivity after 3G connectivity started to be popular for all people, and all people started to rely on the internet or mobile internet. So the wide use of the internet services paved that way for online banking and electronic commerce. And consumers started to manage their financials online, and companies like PayPal, founded in 1998, revolutionized the online payments. In the 1990s, we saw the development of online brokerages, making investing more possible to general public. We have started to see peer-to-peer lending and the crowdfunding made of, and we started to see the crowdfunding and peer-to-peer lending platforms like Prosper, founded in 2005, and Lending Club, founded in 2006, introduced the concept of peer-to-peer lending, enabling individuals to lend and borrow money directly. Then simultaneously, we found that crowdfunding platforms started to appear, and we have seen that some startups started to raise capital from a large number of small investors. Mobile banking and payments started to appear after 2010. The proliferation of smartphones and mobile apps led the significant growth of using the mobile banking and mobile payments, because the revolution of internet connectivity, we started to see that after 3G, we started to see the 4G connectivity, which paved the way to depend or to use the mobile apps widely across all of the organizations, specifically banks, who started to issue their mobile banking applications. And these mobile applications is a way for banking customers to manage their transactions easily and easier than before. Then the mobile wallets and contactless payments option started to be popular, with companies such as Square, which was founded in 2009 and provided innovative point-of-sale solutions for businesses. Blockchain and the cryptocurrencies started to appear after 2010. Blockchain technologies already proved itself in cryptocurrencies, and we already know the most popular cryptocurrency, which is Bitcoin and other and many ten thousands or hundred thousands of Bitcoins or cryptocurrencies already uh, uh, distributed worldwide, and a lot of people investing in this critical and risky digital asset. But blockchain started to be used in banks widely in 2015, and there was an expectation that the 5% of the global GDP or worldwide GDP will be on the blockchain by 2030, and it will be a huge amount. Blockchain refers to the distributed ledger technology, which has a potential to streamline processes like cross-border payments, while cryptocurrencies already have gained an attention as an alternative forms of currency and investment. Still, or yet, it is not legal in many countries worldwide. However, to be legalized, they have to overcome on the volatility of cryptocurrencies, and they have to find a way to generate or produce a stable cryptocurrencies that will be used in formal or legal or legitimate financial transactions, because today cryptocurrencies are used for illegal transactions such as ransomware security, the cryptocurrencies to decrypt your files. We have several business models that in Fintech. So these Fintech business models will be discussed and later on in our next episodes. But we started to have a new business model from Fintech, such as Robo-Advisors and personal finance apps in 2010s. Then we started to have to find that or to see that Robo-Advisors automated investment platform started to be used widely, and they are dependent on algorithms that provide financial advices and manage rich people portfolios. And as we said, it is become popular after 2010. Additionally, personal finance apps like Mint, Robinhood offered users tools to manage their finance, invest, and track spending. We started to see also new forms of Fintech business models, such as RegTech, which refers to regulation technologies, and InsurTech, which refers to insurance technology. And as we said, the technology allowed people to be more innovative and creative in providing or redesign the services, or redesign the way of how we provide the services to our customers. So we started to see new business models such as regulation technology solutions that have been emerging to help financial institutions to comply with the dramatic increase in the complexity of regulatory requirements. InsurTech companies already started to rely on technology to disrupt and innovate the insurance industry and offering more personalized and efficient services. Open banking and APIs is very crucial and very critical for financial services to be more transparent, democratize the access to the data. We started also to have more new business models such as open banking and APIs, open banking initiatives, and the use of application programming interfaces, which we call APIs, became key components in fintech landscape. Open banking already fosters collaboration and information sharing among financial institutions, which will lead to develop new services and enhance customer experience. So the final goal of using emerging technologies is to enhance the customer experience. Okay. And the artificial intelligence, machine learning, when we have an integration between the artificial intelligence, machine learning, the fintech services becomes more innovative and provide more value, or more valuable services will be provided to the customers. AI and machine learning are used for risk assessment, fraud detection, customer service, and personalized financial recommendations. Then we have the decentralized finance, or DeFi, and Neobanks, which is a new business model for fintech that rely on the emerging technologies. And the rise of the decentralized finance explores the potential of blockchain and smart contracts to create decentralized financial systems. We used to see the centralized financial systems, but after the blockchain technology released to be used in financial services, we started to have some decentralized finance business models such as smart contracts. We have Neobanks, which is fully digitalized banks without physical branches. I think in Egypt there is new laws and regulations that allow such services to be introduced to the end bank users or customers. So new banks are fully digitalized banks without physical branches, but they are providing seamless and user-friendly financial services. And these new financial financial services model is a challenging traditional banking model. As we see, the fintech evolution is ongoing and continuously will be revolutionized using technology. And as we relying on technology, and as you know, the technology is growing exponentially, and I mean by growing exponentially that their capabilities will be increased exponentially, that the capabilities of technology may be double the capabilities year after year, and we may notice some jumps in technology capabilities because of the continuous research and development in technology field. So when the technology jump in the capability, we will see new capabilities, and we will see new services that will be introduced to the customer. Okay, our lecture today reached to its end, but before closing our lecture today, we will have this fast quiz. Let's start by the first question. How has fintech evolved over time? A, by focusing solely on cash transactions, by adapting to changes in consumer behavior and technology, by limiting its scope to large financial institutions, or by disregarding cybersecurity concerns. Thank you. By adapting to change in consumer behavior and technology. Which of the following is not considered a key technology driving Fintech innovation? Blockchain, artificial intelligence, fax machine, big data analytics. A, B, D, all of them are emerging technologies, but fax machine, it is an obsolete technology. What is the primary function of blockchain in the context of Fintech? Enhancing cybersecurity, reducing transaction cost, providing centralized control, speeding up traditional bank. Yes, enhancing cybersecurity. Blockchain is highly secure technology, and that's why as a POC or proof of concept, cryptocurrencies developed using blockchain technology to prove that the blockchain is highly secure. How does artificial intelligence contribute to Fintech? By increasing human error? No. By analyzing vast amount of data for insights and predictions? Very convincing. By slowing down transaction speeds, or by limiting customer service capabilities? Yes, B is very convincing. Which of the following is an accurate statement regarding the relationship between Fintech and financial inclusion? Fintech has no impact on financial inclusion efforts. Fintech exacerbates financial exclusion by increasing complexity. Fintech has the potential to promote financial inclusion by reaching underserved populations, and this, I think this is the correct one. Fintech only caters to affluent individuals. Yes, Fintech has the potential to promote financial inclusion by reaching underserved populations. What is the significance of understanding? What is the significance of understanding the basics of Fintech? It has no relevance to the modern financial landscape. It helps in identifying opportunities for innovative and disruption. It limits financial institutions' ability to adapt to changing technologies. It hinders global economic. Yes, it helps to identify opportunities for innovation and disruption. Which factor has primarily driven the evolution of Fintech? Political instability, technological advancements, social media trends, environmental concerns. I think B is the correct one. Thank you. How does Fintech impact traditional banking practices? It makes them obsolete. It encourages collaboration and adaptation. It imposes stricter regulations. It reduces the need for customer. Yeah, it encourages collaboration and adaptation. Thank you very much for attending today's lecture or episode of Fintech and Financial Inclusion Executive Program. Thank you for following us, and I will be here in the next episode. I appreciate if you follow us to till the end of this course. Please refer to our program for your colleagues if you find this course is beneficial for them. I'm Mahmoud Abul Hassan. I was here with you in today's episode. See you in the next episode, and goodbye.